Two. Okay. Now this session is getting recorded. Well, we talked about the introduction, and most of the people gave a quick introduction. Even I gave my introduction. I was enjoying your introduction. I hope you enjoyed my introduction. Well, we started with the word called as the derivatives, and people gave the responses. I could get the three response from Marine, uh, and then let me quickly look into the list of people here. Marlan also gave the response, and then Paulette gave the response on what the derivatives are. And it is informed that you already studied something about the derivatives. And I was just mentioning that this particular course is all about to bring in the regulations, to bring in the risk management in the area of finance. We will be covering the different types of risks which are available. And when we talk about the risk is of two types. Basically, when we call risk, it could be a qualitative risk, and at the same time, it could be a quantitative risk. So the question is that how do we measure risk and what risks are called as? Risk is nothing but basically it's a chance of occurrence of loss. By definition, if you just go for that, it's just the probable loss, but not the booked loss. And then I asked a question: what is the Mexican stock exchange is called as? And I got the response saying that the Mexican stock exchange is known as Bolsa Mexicana uh, de Valores. In simple words, BMV. Right? I'll just take a fresh board here, and then let me make a note of few things here. Come on, this is our basic. So we are just going with this. Okay. Yes. The stock exchange. Let us try to connect the dots in this particular session. It's a B, M, and then V. You should be aware of it quickly to say Bolsa Mexicana, right? Bolsa Mexicana. So B, M, V. We know that it is a stock exchange. Now, if I just want to take with the United States, we have NYSE, New York Stock Exchange, the most popular one. You can also talk about the Dow Jones. You can also talk about the NASDAQ. Yeah, these are the global leaders. Anywhere in the world, people should be aware of what NYSE is and what NASDAQ is. Yeah, the American largest, biggest stock exchanges in the world. That is how even the Google professor say, and of course, the Dr. Manjunath as a professor also say, right? Now, do you have any idea like how many companies are listed in the Mexican stock exchange? Any idea? Like how many companies are listed in the Mexican stock exchange? You can be interactive, you can guess, you can share your views. There is nothing called as right answer or a wrong answer. We are here with one intention.
It's 145, I think.
Yes, roughly somewhere around 140 plus.
Yeah.
Now, I call them as listed companies. Again, I have got a very simple question. Why is that these companies have listed their financial instruments or the securities in the stock exchange? What's your view? Why is that the companies have listed in the stock exchange?
They need money.
Yes, they need money. In simple words, we can say that stock exchange is a place where companies, I'll just write here, a company want to raise finance. Okay, raise finance. When a company want to raise the finance, they have an access to get into the stock exchange. But definitely a company has to follow some steps before they list their securities or equity shares into the stock market. Can anybody tell me what is that the procedure a company should follow?
Well, there's usually like an IPO,
Yes, IPO. What IPO stands for?
initial public offering.
Initial public offering. Thank you so much. And IPO is a part of what market? Which market?
Primary.
Yes. Thank you. We are just trying to build the basics between you and me, and that's the reason we are just going with this discussion. We have a primary market here, and of course, stock exchange can be called as secondary. Stock exchange. Now we can call it here as the secondary market. Fantastic. I'm just enjoying here. I'm just seriously enjoying the knowledge sharing with you guys. You are helping me to learn many things. Yeah. Now, a company, let's take an example of Walmart de Mexico. Walmart is listed company, right? Walmart is a listed company, right? In Mexico?
Yes, it's called
Ah,
Walmex.
yes. It's a listed company in the Mexico. Now, Walmart is not expertised in understanding what is the requirement of listing a security into the stock market. Do you agree? They are not expert in knowing the procedure to list their securities in the stock exchange. I'm making a statement, and let's see what you respond for that. Do you agree with that? Yes or no? You didn't get my question? Okay, I'm asking here, does Walmart aware of the procedure involved in getting listed into the stock exchange? Do they know that process?
I guess they do because they got listed.
Oh my goodness, yes, you're right, of course. That's really a smart answer. Very good. But for a company which is not into the stock exchange, they'll not be knowing the procedure involved to get listed into the stock exchange. And that is the reason they go for someone. Who is that someone? I'll tell you why is that they do not know the complete procedure. Any company for the matter, anywhere in the world, they'll not be knowing the 100% procedure before getting listed into the stock market because their primary business is something else and not studying what is the procedure involved to be in the stock market. And that's why they'll not be knowing anything. But a company will go to someone, and that someone will help the company to raise finance. Who's that someone? It's an open question for you now. Anybody can answer this question. To whom the company goes for asking for an help to raise the finance and to list their securities in the stock exchange. Who's that guy? It's not me. It's not you. Then who's that guy?
They can go with a broker.
Sorry?
They can go with a banker.
Ah,
That specializes in.
I'm sorry. One sec. I'm really sorry. There is something, an issue with the audio, I guess. I could not hear properly.
Está
Ah,
como tapado, se escucha muy lejos.
is it same with the other person? Marine, can you try now?
Oh yeah, do you hear me?
Kind of an echo for me. I don't know. Is it only with me or with the others? Others can confirm. Is Marine okay with his audio?
I couldn't hear him.
Ah, yeah. I could not hear properly.
Yeah.
Maybe I think you can write in the chat box who can be that someone who will be helping the company to make sure the company securities are listed in the stock exchange? Who can be that someone? A bank. Marine says a bank. Very good. Now, when you say bank, banks are of two types basically. Let me help you quickly because when you work for the global companies, definitely you may come across these things. I remember soon after my graduation, when I started my career with the American based company, of course, I learned many things when I was working with them. When I say bank, it is not just a bank because there are two types of bank. One is the commercial bank, and the another one is, can you guess what is that?
Private.
No, no, no. When you talk about the commercial, you have a public bank and you have private bank. When you talk about the commercial, this is one of the category, and the another category is what? What kind of bank? The second category. See, with the commercial bank, you and me have an account with the bank and we do the transactions and we are called as the retail customers for them. We are the retail customers. Yeah, we are the retail customers. Like you and me, we transact with the bank account with which we have. And that bank is called as a commercial bank. But there is another type of bank who will not be providing the services like how your bank and my bank is providing for you and me. They look for the companies as the clients. And what is that bank called as? It starts with I. Any guess?
Investment bank.
Yes, you're right. Thank you. That is called as investment bank. Now, when you talk about the investment bank, of course, they have the customers are not like you and me. The customers are now here called as the clients, and the clients are nothing but the different companies. The different companies. Maybe Walmart might have approached one of the investment bank. We can take the investment bank, say JP Morgan Chase as one of the example. JP Morgan Chase as one of the example. JP Morgan, you can simply say investment bank. Maybe the Walmart or any company can have an association or a relationship with the investment bank. Now let's assume that Walmart has approached investment bank, that is JP Morgan, asking for, can you please help our company to get listed in the stock exchange? I'm using word now, listed in the stock exchange, listed in the stock exchange. So now the company wants to list equity shares. For now, we'll take just an example of an equity share. When a company wants to list their equity shares, they are definitely in touch with the investment banks because the investment bank will be helping them to understand the process and then deal with the completion of listing the security. Now, in the JP Morgan, which is an investment bank, there is one department which exclusively work towards allocation of shares or the securities to the public. And that department starts with you. What is that? There is someone who is promising the company that they will sell their shares to the public. And in turn, they raise the money for the company. And that person or that department is called as what? It starts with you. Any guess? I know you might have already studied, but yes, just to build a connect and to have a basics, we are going with this. I'll write the second character N. Any guess now? Now,
Underwriting.
yes. Thank you very much. So underwriter is the one who will be promising the company that the company stocks or the shares or the securities are sold to the public. So here, investment bank and the underwriter will take the responsibility of preparing the initial public offer prospectus document. We know that IPO prospectus, probably you might have heard about red herring prospectus, right? Prospectus. So the investment bank and the underwriter will be preparing a prospectus, and that will be shared to the public with the help of stockbrokers. So I'm just writing here with the help of the stockbrokers. Yes, there will be an announcement. There will be an advertisement about a company which is willing to go for issuing the shares to the public for the first time. And that is called as IPO. Now, in the IPO process, now let's say Walmart in the past approached JP Morgan investment bank, and then they said they want to raise, say, 100 million US dollar capital. And investment bank JP Morgan and the underwriter who is with the investment bank decided to work on this deal, and then they prepared a IPO prospectus. Now, when I say IPO prospectus, that is made public, that is displayed to the public, that is shared with the public, so that what public can do? Public can read the complete information about a company. So I'll write here, prospectus is nothing but it is a detailed document. It is a detailed document about the company. Yes, a detailed document is prepared by the investment bank and is made public. The very interesting question here is that when a company wants to raise finance and when they approach the investment bank in turn helping them, but when they are helping, of course, they're not just doing it for free of cost. They will definitely charge money for that, right? Yes, the investment bank will charge money. That is called as a fee. They charge fee on the work or the activity, whatever they do for this company. Now, the question what I have to ask for you is that generally in the IPO, in the prospectus, there will be a price range for a public. And when I say price range, there are two types of range, that is floor price and cap price. And this range is given in the prospectus because public is eagerly looking into the price range. A floor price and a cap price. Floor price, we can take an example, say as $10, and for the cap price, you can say say 12. This could be the range. And when this is the range, price range given in the prospectus, let's say you and me as a public will be applying for the company shares. Now, what the public can do in the primary market? Public can apply. That's it. People here in the public or in the primary market can simply apply for shares. They cannot buy. You and I cannot buy the securities in the primary market because it is up to the discretion of a company to allocate or to distribute their securities to the people who have applied for it. Now, I'll take an example. In the session, we have 15 participants, including me. Yeah, 14 of you and one is myself. Let us say we all have applied for this IPO, the IPO which we are talking about here in this class. Now, there are 7 people who applied at the rate of $10, and I'll take 2 people who applied at the rate of $11 because there is a range between $10 to 12. You can apply. So 7 plus 2, 9 is done, and the other 6 are now applying at the rate of 12. Now, what is your understanding? Like, how is that the company in consultation with the investment bank make a finalization of the price? What is the final price? How is that the company will come to the conclusion of the final price. What's your understanding on this? This is the open question for you. Take your time, nothing urgent, but try to respond to this question. You can take time, 2 minutes, I don't mind, but I want to know how is that the final price is arrived. In this case, is it $1.10 or $1.11 or $1.12? If you want to unmute, you're most welcome. You can unmute and then you can have a discussion with me. If you want to write it in the chat box, you're most welcome. You can write in the chat box also. But I'm eagerly looking at you and your response. What is your understanding on this now? Who decides the final price or how the final price is derived? Your 2 minutes is still on. You can just think about that. If anybody is enrolled into the CFA, I'm sure the CFA guy would be knowing this as the answer quickly. Otherwise, also no problem. Maybe you should be remembering it. You might have studied already.
If someone applies for it, that price can be set as the final price, right? Or maybe it's the price with the most application.
Yes, you're right. Price with the more applications. So basically, when we say price, there is something called as price discovery mechanism. You heard about this? Price discovery mechanism. I don't know whether you heard about this term price discovery mechanism, which is applied during the primary market to arrive at the final price. There is a process which is called as book building process. Have you heard about the book building process? If yes, you can give a thumbs up. Ah, really? No? Paulette? You never heard about the book building process?
I don't think so.
Ah, my goodness, no problem. Thanks for the confirmation. Well, there is something called as book building process. This is a mechanism which is applied by the investment bank with the underwriter in order to derive the final price. As my friend said, on the basis of the number of applications, we can come to a conclusion saying that where the demand is, right? This book building process is trying to talk about demand and supply. Yes, demand and supply. When it is trying to talk about the demand and supply, now you can see here, if I just draw the x-axis and the y-axis, let's say this is called as I'll just take here some observations. We can call it as the price on the y-axis, and on the x-axis I can say number of applications. Yeah, number of applications or the subscribers. Now I have $10, $11, and $12. Now at $10, maybe you can see here we have 7, 2, and then 6. You can draw the vice versa. At 12, you can see the 6. At 12, you have the 6. And at 11, you have 2. Maybe you can write 2. And you have at 10, that is 10 here. And you can see the 7 participants. Yeah, 7 applications. You can draw something like this, or if you're fond of using the bar charts, you can also write a bar chart. You can see here this bar chart is for 10, and for 11 it is very small, and for 12 it is something like this. I'll write here 10, this is $10, this is $11, this is $12. You can see here for 10 we have 7 respondents, I mean the 7 applications from this example, and for 11 it is 2, and for 12 it is 6. Just by looking at this, we have 2 types of charts. Whatever is comfortable for you, you can just go with that. Maybe if you're fond of using the bar charts, you can look at the bar chart. If you're fond of looking at the dotted graph over there, you can also go with that. We have different types of visualization. Well, by just looking at this bar chart, any person can understand that there is a huge demand at $10. There is a huge demand at $10. And at $11 we have only 2 applications, and at $12 we have 6 applications. Somewhere you can say between 10 and 12 it's almost the same. The fight is almost close. Now, the price discovery mechanism follows with the book building process. The process of segregating the number of applications received at individual price, and then coming to a conclusion of the finaling the price is called as the price discovery mechanism. If the final price happens to be here, what is it I can say? I can call $10 as the final price. I can, case number 1, you can just consider $10 as the final price. If I consider $10 as a final price, now there are 2 people who applied at the $11, and those 2 people, if they get the shares, they'll get the refund of $1. And 6 people applied at the rate of $12, and if these 6 people also get the shares during the allocation, because they applied at 12 and the final price happened to be 10, they'll get the refund of $2 if they get the shares. Now, there is one popular statement in the IPO market, that is the primary market, that is, not all the applicants will be getting the shares. By the way, do we have anyone here who has applied for IPO during your lifetime? I just want to know, because I'm really curious. When I was doing my BBA, that is the undergraduation, when I was doing my undergraduation during my second semester, I remember that I did apply for an IPO. It was a company related to wind energy. And yeah, in fact, I made money. I got at the rate of 510 INR rupees, 510. On the day of listing, it was 785. And you won't believe, I bunked a class. I took the permission, in fact, from my professor saying that I have got the shares from Suzlon, the company. Then I said, today is a listing and I want to go and make a selling on day 1 itself. My professor was very happy because I started talking about the markets. I started talking about the IPO during the second semester. And when I saw it was flying at 700, there was a plus of 200 rupees per share. I sold and then I booked the profits. I remember my days during the IPO. Well, is there anyone who has applied for the IPO here in this class other than me? No? Okay. Well, I just looked at the clock and it is giving me a kind of signal now to have a quick 10 minutes break. Would you like to go to the break now? It's been more than an hour now. The session started more than an hour. So I'm just asking you if you would like to go for the break. We can call it a quick break of 10 minutes. Are you in need of a break?
Yeah, we'll go to a break.
Yeah.
I'm fine with that.
Yes, thank
Yes.
you.
Yeah, sure. Thank you. We'll see you after 10 minutes. Let me check the time now. It's 9:17. Okay.
Yes.
You can take 10 minutes and then come back, and then we shall
Okay.
resume the discussion from the point. Thanks.
Correct. Thank you.
Thank you. Yes, welcome back. I believe you are back from the break. Yeah,
Yes.
Yes.
yeah, thank you very much. I appreciate that. Thank you for making me feel that yes, I'm with you. That matters a lot. Well, we were discussing something about the price discovery mechanism, a process which is involved in identifying the demand and supply on the basis of public applying for shares or the securities in the primary market. Now, we know that the underwriter or the investment bank is the one who has got the responsibility of identifying or discovering the final price. We assumed that $10 happens to be the final price. Now, in consultation with the company and investment bank, along with the underwriter, the security or the securities of the Walmart or a company is now getting listed in the stock exchange at that final price. At that final price. Therefore, the final price happens to be the $10, and at $10, the company share price is listing, and that listing is nothing but it is called as a listing day, the day on which the company shares are listed in the stock exchange. And we know that stock exchange is a place, I can say here X, one is the buyer and the another one is the seller. They buy and sell, they exchange the securities. And that is where the stock exchange is called as secondary market. The moment when you and me, after applying for the shares, if we get the shares, if we get the securities on our IPO, then we are no more called as a public, we are called as the shareholders of the company. Since in our example, we took the name Walmart, the moment when we get the shares from the Walmart, we are called as shareholders of Walmart. And we are entitled to get the dividends on the company's earnings, that is Walmart. So this is the story behind getting listed into the stock exchange. I was under the assumption that you might be aware of this. However, I thought of talking about this because when we talk about the derivative instruments and when we talk about the risk, uh, but it's better that always we have sound basics, irrespective of the country, irrespective of the region from where we come from. But the process never fails and process never changes. And this is the standard procedure across the globe that the investment bankers play a predominant role. And that's why I don't know the culture barrier over there. But you know what? Here with the B schools where I'm associated with, generally the finance students, they always have a kind of dream saying that okay, they should work for the investment banks. Some people will be having a dream saying that they should get the chance to work for the Goldman Sachs, an American based, right? They pay high, and the status quo, if you really work with such kind of companies, the exposure, the experience is really high, and people set a dream. Off note, I just thought of sharing that with you because you should be knowing that in this course. This course should also help you to set an idea, a kind of a target, like say what kind of companies probably you can look for. There are so many things which are involved in this. Okay, now if you have any question here, you can always ask me. You can just raise your hand if you have any question at this point of time on the basis of the discussion, whatever we did. I'll give you 2 minutes time just to look at this and try to understand whatever is on the board. If you can connect the dots, good. If you have a question, you can unmute, you can write in the chat box, and you can ask me the question in the next 2 minutes. Well, I generally give the platform for the people to ask questions or to participate in the uh, discussion. I generally create that environment. For now, if you have nothing, no issues. This is how generally with every session I'll be going, I'll be using the board, I'll be discussing with you, I'll take some examples, I'll tell some stories, and then we will try to connect the dots. And at any point of time, if you feel that okay, you're not following it, you can stop me by. You can just raise your hand. You can unmute. You can talk in the middle. I never have any kind of escalations. I always love to hear what you say or what you ask for, because unless until you understand, then the purpose of Dr. Manjunath will never fulfill. For that reason, I always want you to stop me. In simple words, I want you to disturb me and then get the information what you are looking for. Right. Okay. For now, I'll take this as an acknowledgement, and then I would like to proceed further and then talk something which is very important. Now, how many of you have Demat account? By the way, are you aware of the word Demat account? Dematerialized account or a trading account with the stockbrokers? Is there anyone in this batch who is involved in investing on the shares? If so, raise your hand. I would like to see if anybody is engaged in buying and selling of shares. If nobody is into that, then the question is, how is it we feel the risk? On a lighter note again, oh my goodness, nobody is involved in the buying and selling of shares. I'm seeing here the list of the participants. We are 11, excluding me at the moment. Really?
I was enrolled, but I stopped like a couple of years ago
Oh my goodness, why? Any specific reason?
because I started working.
Eduardo, thank you. Thanks for that. Yes, I just remember that when I was into the undergraduation, I invested my hard-earned money. Of course, I also played with my dad's money and I encountered some losses. But still, the journey with the markets is still ongoing. Uh, yeah, risk is what one important factor. Yes. And another thing is, as Eduardo mentioned, maybe if we are very busy and then we may not get that kind of time to understand what's happening with our investments, right? Okay. Now, coming to the point, you and me, I was just saying that, okay, you and me, simple words, you, and we have on the other hand, Walmart company, Walmart company, and we know that it is listed in the BMV. It's BMV, right? Is it? It's BMV?
Yes.
Yeah. Thank you. You are with me. BMV. We know that it's listed in the BMV. Okay. Let us develop something here. When I say you want to make money on money. I'll just write here, you want to make money on money. Then who are you? When I say you want to make money on money, then who are you? You're called as what? Come on.
Investor.
Yes, one of the word is investor. Anything else other than the investor? I'm actually looking forward for one more terminology. When you really want to make money on money, you are called as investor. I do agree. At the same time, you can also be called as someone.
Maybe a stakeholder.
Stakeholder. Okay. Now, the moment when you become a, say, the investor of Walmart, undoubtedly you are the shareholder. There's a difference between the stakeholder and the shareholder. We shall look into that in some time. I'll just make a note of that stakeholder here. Okay. But I'm just looking for the other term. When I want to make money on money, I can be an investor. I can also be something else. What is that? It starts with the T. What is that? Any guess? T. And then I'll just write one more term, that is R A D E R. Trader. I'm sure you heard about the word trader. I, being a trader, what I always look for? I always look for making money on money. Maybe the trader is looking at the short term, and the investor is probably looking at long term. At the same time, you can also say the medium term. Never mind, you can say medium term. There is one more term which is very, very short term. Who is that guy? And what is that called as? Very, very short term. Can you just guess? One is the investor, another one is the trader, and very, very short term. That is called as speculator. I'm sure you heard about the word speculator. Speculator is the one who always involves in a day-to-day transactions, day-to-day transactions. Now, when I say day-to-day transactions, yes, it is nothing but intraday, which means that you buy now and then in next few minutes you'll be selling, or you sell, you short now, and in the next few minutes you may cover up it, or you may buy back, then you may say you have closed the transaction. It is always that you will be looking for a price movements in the case of a speculation or a speculator, you being a speculator. I have played the role of a trader, investor, and the speculator. There is a thin difference between the short term, that is the trader, and a speculator. Speculator speculates on the price movements irrespective of the analysis. However, the investor always looks at the fundamental analysis. I'll be just writing few terminologies. Let's see how is that you are equipped with these things. Fundamental analysis. And for the traders, they always love to look at the technical analysis. Of course, the speculators, they also look for the technical analysis, but they are very, very, very short term. They trade on a minute to minute basis. They always look at the charts minute to minute. And then they also have something called as hourly trades, R to R, hourly trades as a speculator. By the way, did you come across the fundamental analysis and the technical analysis anytime earlier? I just want
Yes,
to
like a year ago.
Yeah.
No?
Yes.
Okay. I got a mixed response, I guess. Did I get a mixed response?
I said that like a year ago.
A year ago. Okay. Is there anyone who said no, Sarah? Did anyone say no?
I heard another yes,
Ah, yes.
but I don't know.
Okay. Which means that you're kind of familiar with the types of analysis which are available for the investors and the traders. That's good. Let's not get into the depth of the technical analysis and the fundamental analysis, but just on a lighter note, you should be aware of that. There is a popular approach which is called as the EIC approach. In the case of fundamental analysis, you'll be trying to understand the economy, you'll be trying to understand the industry, you'll be trying to understand a company, so that your fundamental analysis is done, and probably you may take a call of investing on the shares or on the securities. Now, there is a thin difference between the stakeholder and a shareholder. I know maybe someone in this particular class might be aware of the difference between the stakeholder and the shareholder. Let me give an opportunity for others now to share the views. Sarah, do you have any idea the difference between the stakeholder and the shareholder? Aldo, do you have any idea on the difference between the stakeholder and shareholder?
Yes, the shareholder is someone who already invested, for example, and the stakeholder is someone who's affected by the operations of the enterprise. For example, the worker, or maybe a supplier, or something like that.
Yes, something like that. I just was able to understand the idea which you're trying to talk about. Shareholder is the one who has invested on the shares of the company, and stakeholder is the one who is having an interest or a stake on the operations or on the company. Now, when I say the stakeholder, examples could be the suppliers. Suppliers could be the example of a stakeholder. Even the customers are the stakeholders. Employees are the stakeholders. Yes, employees are the stakeholders of a company. And these guys, the suppliers, the creditors, or the customers, or the debtors, or the employees, they have a special interest on the company. They have the stake, they have their ownership. They have their ownership in the sense that they are having a business, they are having a part of business relationship. And that is how they are called as the stakeholder. Here, shareholders are entitled to get the dividends. Is it mandatory that the shareholders should get the dividend from a company? What do you think so? Is it mandatory? Yeah, this question is for you guys. Is it mandate? Aldo?
So it depends on the company if it wants to give those, and if it doesn't, well, then it does not.
Okay, now I have a case for you. Let me give a case for you, Aldo. I want you to respond to this. Let's say a company is not doing great. The company has reported losses. In this case, the company is still going ahead to give the dividends to their shareholders. Is it a good sign?
Because if you don't have, if you have loss in the year, then you don't have anything to give to your shareholders.
Yes, good. You cast it. Now, when I say dividends, now see here, this dividends is nothing but it is a part of ownership. Now, let me break this. Maybe you can catch this visualization here. I call this as a profit. What kind of profit? To make it more clear, I can call this as a net profit. And I am distributing this portion, the one which is highlighted here. This portion is called as dividend. And now I would like to keep rest of the money with the company itself, and that is called as reserve, or you can also say retained earnings. The earnings are retained. Some part of net profit can be distributed in the name of dividends. Therefore, dividend is called as the appropriation. The appropriation of the net profit is termed as dividend, and this dividend can be distributed to the shareholder, and it is not mandatory in the case of equity shares. But in the case of preference shares, I'm sure maybe if you're not aware of the word preference share, you can just raise the alarm quickly. There is the second type of share, which is called as the preference shares, wherein the preference investors or the preference shareholders should get the dividend on priority on a preference note because they are the preferred investors. So the preferred investors, they should get the dividend irrespective of the company's profits or losses. And now, if a company is making losses, still they want to attract the investors. What they do, they take the additional load, the debt money, and the debt money is going to the shareholders in the name of dividend, just to make sure that they retain their investors. And this is not a good sign. We have seen in the past that many companies, those are not doing good, they still go ahead and then they like to give the dividends and then they end up with something. Now, you and I, as an investor or a trader or a speculator, for a speculation, we are concerned only with the prices, only with the prices, or I can say price movement, right? Price movement. We are concerned only with the price movement. And when I talk about the technical analysis, we are looking at the historic prices. We are looking at the historic prices. See the difference here because we are connecting everything to the risk management, the amount of risk one is ready to take. The first is price movement on a minute to minute basis, being very much speculative. And the second thing is the historic prices and then making the technical analysis. And the third important thing is that we always go for the long term investment, and that is the investor on the basis of the fundamental analysis. You know what? We always try to check the credit rating of the company share. Now, Walmart shares are evaluated by the credit rating agency. Credit rating agency. What is it they do? They rate the agency and they say the level of risk that company is exposed to. Maybe a moderate risk, maybe a conservative, maybe the aggressive. Now, when I say aggressive, maybe the credit rating agency might rate the risk level as a high risk level, or when I say conservative, it could be a low risk. When I say moderate, it could be a medium risk. Now, any investor, before they invest their hard-earned money, they always look for the ratings given by the credit rating agencies. Do you have any idea about credit rating agency in Mexico? I have no idea. Do you have any idea? Like Standard & Poor, S&P in the case of US, credit rating agencies in Mexico. Let me check for credit rating agencies in Mexico. Yeah, I can see that Moody's, S&P, Fitch, they give a kind of rating, something like say AAA plus, A3, triple B plus minus, something like that. Yes, the credit rating agencies do rate the securities, and that really helps the investors to understand whether there is a risk involved if they invest on such kind of investments, which affirms Mexico at triple B minus. I could see one of the article on that. Yes, we know that there are credit rating agencies and they are rating the financial securities, not necessarily the shares, even the bonds, even the preferential shares. Yes. Any investment financial asset, right? Any financial asset for the matter. Or you can simply say the financial instruments. Any financial instrument, when they are issued by the company for the investors, at the time of issuing, they always would like to publish their rating because investors always look for that rating before they take the decision of investing in any of the security. So here, from this particular discussion, we are concluding here on that, saying in the investment world, there are people who are so quick in nature, that is aggressive, who wants to make money, quick money, and they are called as the speculators. At the same time, we can see some people who are much relaxed and they don't like to take too much risk. They say they are okay and they would like to invest today and they would like to take the returns in the future. They are the investors, right? They are the investors and they are conservative in nature. You can also see something called as traders, maybe moderate. Sometimes they take the risk, sometimes they don't take the risk, but the level of risk what they take is medium risk or a moderate risk. In the investment world, in finance, we need to be aware of that. The amount of risk you take, the amount of return you get. Higher the returns, higher the risk. Lower the returns, lower the risk. But this is the traditional financial management, which is talking about higher the risk, higher the return, lower the risk, lower the return. But have you heard about something called as Markowitz model? Markowitz. I'm just adding something. Markowitz.
Yes, I've heard of it.
Yeah, what he says at a given level of risk, at a given level of risk, try to maximize the return, which means that he talks about diversification. And there is a popular term in the investment world that is never put all the eggs in one basket, which means that if you have 10,000 US dollars, don't put all 10,000 US dollars on Walmart shares. Because if the share price goes up, you will enjoy. If the share price goes down, you will not be enjoying because you're at a losing end. Therefore, you will have to identify the right mix of investment avenues so that if your money is spread across, you can manage it. In one of the security, if the share price is falling, at the same time, there could be another share price which is moving up. Somewhere it could be balanced. And that is what Markowitz talks about. He says, diversification. Never invest on a single stock. He says, never invest on a single stock. Therefore, the portfolio management comes into the picture. So Markowitz model talks about portfolio management. I'm sure maybe you already have by now an idea about what is a portfolio. Portfolio is nothing but it is a combination of different investment avenues. Let's say you might have invested some portion of your money into the IT sector, information technology, and some portion into the banking sector, and some portion into the infrastructure, in the fashion, and then you made it as one portfolio, a basket of securities, and that helps you to manage the risk. So we have used the term now in the second half of the session. We started looking at the risk perspective, but it is at the beginning stage. And now, if I look at the time now, we have 2 minutes to close the session. So I would like to stop here for now for this session number 1 and ask you if you have anything to ask me, you can ask me quickly. In the interest of the time, we have to stop in next 2 minutes. Our session number 1 is coming to an end. My goodness, we are already one session old by now. Yeah, I know few people. I have already started recalling your names, and definitely I always look forward from you to have an interaction, share the things. If you know the things, keep talking to me in the class so that it gets a kind of confidence, and then I can switch the gear and then I can move ahead, right? There are so many things in the risk management. We have to talk many things. Any quick question here?
No question.
Great. I really appreciate even that response because, as you know, that I'm eagerly looking forward to have the responses. Well, I'll take this for now. The one response which I got saying that no question. May I expect from you guys, those who are present in the class, to write one email to me in terms of your experience with the session one, because I just want to make sure that you are able to follow me so that I can able to follow you, and then we both can do the business together for the next few sessions. Yeah, I'm eagerly looking forward. Maybe you can write my language if you're finding any difficulty in my English or in my body language or in my writing or in my discussion or in the examples. You're most welcome to write in the email the challenges which you're facing. That is one, the challenges which you're facing. I am eagerly interested to know the challenges faced by you in the session one so that I can fix it and I can make sure in the next session you will be enjoying my session. That is one. Second, what is that you have learned from the session number one? So these are the only two things which I am expecting from you to write in the name of an email. Can you? Can we make a deal?
Yes.
Yeah, thank you. Thanks, Marlon. Thanks.
Yes.
Yeah, thank you, Eduardo. Fine then. It's 9:30 p.m. for me, and for you, the session ends here. I wish you a very good day. Enjoy your day, and don't forget to send an email to me for those two questions. Thank you for being present today, and see you tomorrow in the next session.
Thank you very much.
Thank
Thank
you.
you.
Good night.
Thank you.
Bye.
Bye bye. Take care. Good day.
Bye.
Bye bye.